Hi everyone, welcome back to Edwards Trades. I'm here again to give another weekly market update, the SPYs, the QQQs, as well as the core listed companies. And a lot has changed from last week's video moving on to now. And today's video is going to be a little bit different. I think I decided to maybe explain a little bit more in depth of exactly what is going on within the market. And I guess give you guys a little bit of a basic knowledge of what you guys are currently seeing going on in the market. I know for those of you guys who are invested or who are not invested, the stock market has kind of went down since my last video. And those of you guys who did watch my last video, I did predict that the overall market was going to set up for a bull trap, which basically means that a lot of buyers got trapped, as you can see here by the SPY. A lot of buyers got trapped in my last video, which was last Wednesday. So this was right around here on the 24th, I believe so. But in that video, I specifically stated that we're possibly waiting for the Fed meeting, which took place, which I'm going to explain as well, to set up for a bull trap, which led to this huge red candle that you guys are currently seeing on the screen. And thus, my analysis came true, in which that, a lot of buyers got trapped, causing a lot of selling pressure Friday during the meeting. But the reason why today's video is going to be a little bit different is because I'm going to be explaining to you guys why these things happen, and also I'm going to go over my trade that I took today in Apple puts, which I'll explain later in this video. But first and foremost, I know in my videos I usually get straight to the point about the market outlook, how things are looking, and some like patterns and levels to read. But I'm gonna try to, in this video, I'm gonna make it super basic and I guess explain the overall psychology of the stock market, since I know it could be a little bit confusing when you guys watch my videos and you guys are not really grasping the ideology of my analysis and what I say within those videos. So today's just going to be, a little bit of a calm video. So I'm not going to get too in depth with every company that I do besides Apple, but I'm going to go over SPY, QQQ, and Apple to explain my trades and why these things happen. But first and foremost, for those of you guys who are, again, new into the stock market, my word of advice is that the stock market is filled and compiled of money. So money is a main driving force within the market. So clearly, that allows the market to either move up or down, which you have bulls and bears, which is what the terminology is for buyers and sellers. You have the bulls and you have the bears. And the reason why I'm explaining all that is because when for example, in my last video, when a bull trap happens, right, what does that basically mean? That basically means that a lot of people who had money, who had positions and options, that are betting that the stock is going to go up. So, for example, since I analyze the tech sector, a lot of people assumed that Friday's meeting that the tech sector was going to rally because there was going to be good news and so on and so forth. So the reason why it's called the bull trap is because, as you can see here, from the 25th, if I'm going to check my calendar really quick just to see if I'm right. So this Thursday, or last Thursday, excuse me, we had, in my video, which was the 24th, I said that the market's probably setting up for a bull trap because I'm seeing a head and shoulders pattern, yada, yada, yada. So again, a bull trap basically means that, as you can see here, on the Thursday before the meeting, this was Friday, right? A lot of buyers had the anticipation, the thought, or you can say the hopefulness that, the market was just going to have good news Friday and the market was going to rally, all butterflies and rainbows. But that didn't happen. So what happens is that during Friday's meeting, there were obviously some, bad news that came about it. Inflation is still not under control, that the Feds are going to be more restrictive and include more interest rates and rate hikes, which is going to be bad for the stock market as well as the housing market, which led to this big downfall during last Friday's trading session. And the reason why this all played out, right? Each candle that you guys see here has a certain meaning, right? And due to the fact that, again, we have different time frames here that you guys are seeing, or I don't know if you guys can see here. Let me go to my thing. But we have different time frames here that you guys could or I can maneuver from one side or another, right? Depending on how large the volume scale, in other words, how many people had positions during that Thursday leading on to Friday, drove the selling pressure here. So every little thing that you guys are seeing here has meaning. This green obviously means buyers, red means sellers, so on and so forth. So all that's important because it helps me, or helps you guys, understand that the market is influenced by money. So when I say a bull trap, that basically means, again, that buyers anticipated this green candle. Buyers, a lot of people who had money on the line, got, you could say screwed over Friday because, the news came out so bad that it drove a lot of people to sell their positions and drive the volume down. And this is why you got a big red candle leading from Friday's trading session. So all that what I'm trying to say is that the market is consumed by money. You have people that want to buy stocks, you have people that short stocks and sell them. You have bulls and bears, and they're always racing against each other to see who's right and who's wrong. And that's how patterns and trades and all this, technical analysis that I assume every day come about, because the market is the market. And it's all psychological. Just because I say it might happen may or may not happen. A lot of streamers that I watched during Thursday leading up to Friday assumed that the market was going to rally a little bit higher. But I thought the other way around last Wednesday, just because of the fact that I anticipated patterns, a certain pattern, which played out in this favor, but the news kind of drastically allowed it to drop further. But the gist of it all is that what I'm showing you guys in my videos, it's just how a kind of like conceptual guide to how you should be reading the market. The market is not always 100% guaranteed. It's all based on ideology, theory, assumptions. Not everything is conclusive. So yes, I could have been wrong here, but making predictions is what I do. I kind of look into the future, because if you guys were to watch my last video and hear what the things I say, again, it played out exactly in that way, to where the market dropped just how I said it would. And it was a big bull trap. Buyers got caught here. They sold Friday, and then we're now seeing continuous selling pressure leading on to this week. So everything has meaning, and I apologize for those of you new viewers who don't really understand the market and why things are going up and down. It's because people are buying and selling stocks on a consistent basis, including cryptocurrencies. And us traders, or me as an example, we take advantage of what we see in the market. So these charts right here, like for example, the drawings that I be showing you guys and my analysis of stuff, it all has meaning, because we're only assuming, of where the market's going to go. Nothing's ever guaranteed, which is why I have, every streamer that you guys watch that do stock market videos, they always have these disclaimers. It's because not everything is guaranteed, right? So I guess your first lesson that I already said is that the market is influenced by money, and money causes things to move. And just like, in the real world, just money is constantly flowing in and out of the economy, outside of the U.S., inside the U.S. The stock market is filled with money. So it's not just me that's influencing the stock market. Is people around the world. You know what I'm saying? So because of that reason, that is just what makes up the stock market. So I guess that, like I said, the first lesson is that the market is all influenced by money. You have buyers, sellers, so on and so forth. And that all drives, and the market's only doing what the market does. The market is never going to go exactly the way I say it. We technical analysis people only can assume where it's going to go based off history, from past times. So like if I go to the weekly for SPY, it's all history, it's all repeated. That's how we make our assumptions, and that's how we come up with analysis for what may or may not happen in the near future. It could be today, tomorrow, next week, a month from now, so on and so forth. So I really wanted to touch on this subject because I know in my videos I kind of get straight to the point without really explaining what each and every little tick means and stuff like that. So my second lesson is that these bars that you guys see here, these green bars here, all have meaning. So these, just to simply put it, for the sake of the longevity of this video, that the green bars are buyers, the red bars are sellers. Depending how big these bars are, you could kind of think of it as like you work out, right? The bigger the green bar, it's kind of like the bulls are pushing a lot of weight, right? If you guys look at the small red bar here in this little one here, that means that, you know, there was a little bit of selling pressure, bears as you would call it. There was a little bit of red, and then, you know, it kind of came down. And there's different levels and volumes and sizes, you know, for these bars, and they all have certain meanings and stuff like that. But leading on to what I'm talking about last week in my video is that this driving force down here meant that a lot of bulls got caught here, and that drove the selling pressure down. So what does that mean as far as like in-person example? That basically means that if I were to tell my investor, or if I'm like a financial advisor, and I said, and you know, you have different, again, it's filled with millions of people with money on the line, right? And if everybody's saying, okay, well, this news is bad, what happens when everybody sells at the same time, hearing the same news about, you know, interest rates and yada yada yada? Everybody's gonna sell, and whoever got money here in trading or in stocks, they're selling along with everybody else, and again, that drove that big red candle means how much people were selling at that Friday time after the news and so on and so forth came out. Because as you can see here, this red candle is bigger than this one. It's bigger than these little ones over here. So the magnitude of selling pressure, people selling their stocks, shorting the you know, tech sector, so getting out of their positions, drove the market to come down and down. Even cryptocurrencies as well. It's kind of the same assumption or same flow. So that's just the basics of how what these green and red candles represent in my videos. So moving on to, I guess, a quick lesson number 3. When it comes to, again, making these assumptions, everything that I say is all psychological, is all theoretical in the retrospective of when stocks form patterns, and, you know, they hit certain red lines, or they're called resistance and support lines in this throughout history, and they form patterns, and that's how we, you know, technical analysis people make trades, because of these patterns that form. And in my last video, I mentioned a head and shoulders pattern, which was laid out in right around here. If I could go ahead and draw it just for you guys real quick, I drew it out just exactly like, oh, excuse me, let me go ahead and erase that. So hang on a second. Okay. So I drew it out right here. You have the left shoulder here. You have the right shoulder, or the head here. And then you have the right shoulder here, come out in this form. And then what happened is that the patterns play out by itself throughout time, right? Because it took time for this pattern to form out. And then it finally formed the right shoulder, which is considered the dead shoulder. And then it broke, you know, resistance here, and then that caused selling pressure to continue, and then so on and so forth. So the market is filled with money. It's filled with patterns. And all we do as technical analysis is that we read off the news, we read off the volume of these candles, we read whether or not, you know, buyers are in control, the green candles, or sellers are in control, the red candles. And I'm gonna now talk about Apple in my trade that I did today. I bought Apple puts this morning, so let me go ahead and load up Apple. But yeah, as I mentioned, or what I'm saying, it's all conceptual, it's all theoretical, and I don't want to make my videos super long and complicated, but everything I say is true. So I mean, you guys can literally look up head and shoulders pattern, and it literally is played out exactly how I said it would. And that's all it is at the end of the day when it comes to technical analysis or trading stocks or cryptocurrencies or commodities, you know, treasuries. It's all the same thing. It's just, you know, it's one is more intense than the other, so on and so forth. So I mentioned Apple. I bought an Apple put this morning, and I'm going to explain to you guys exactly how it played out this morning. So this was this morning. Let me go ahead and go to a smaller time frame, the 5-minute time frame, just to give you guys a clear picture of exactly what I meant by, you know, stocks have patterns, trends that I use and analyze beforehand to take advantage and make, you know, my trading decisions, and, you know, come up with a thesis of, okay, this is how the market's going to play out, right? So, sorry for the rambling here, but let me get straight to the point here, right? So this morning, I think it was right around 8:30, I decided to look into Apple, and after that huge downpour, the head and shoulders pattern played out, right? I figured that the market was going to go a little lower. So I was looking for an opportunity. So this was Monday, right? This was this morning, right? 8:30, because today is the 30th after all. So right around 8:30, I found a pattern called a rising wedge pattern. You guys can look it up. So basically, I took a position. I laid out a drawing from this end here, from this point to this point here, leading on before the market opens. So now we're gonna go to a smaller time frame, the 5-minute time frame, right? So ignore all these other lines and just pay attention to this blue line here, right? So a rising wedge pattern forms when we have 3 points leading to a rising pattern. So we have resistance from Apple at 163 and during pre-market hours. So again, this is this morning, right? We were rejecting this area of 163.50, which is considered resistance, or you guys can think of it as a barrier. And I took a put position because if you guys look up a rising wedge pattern, it literally is a pattern where the market bounces off this trend line that I've drawn out here, and we've rejected here. If we want to go to the 1-minute time frame so you guys can see a better example, I took a position right here and we rejected this line right here, and I took a put position here. Let me go ahead and get rid of this because this is a little distracting, so let me get rid of that. Perfect. So in that morning I made an assumption, right? This is just my thought process of how technical analysis predicts the move. I said, okay, we have a pattern, a rising wedge pattern forming, right, on the 10-minute time frame, and I took the initiative this morning at 8:30 because the market's open at 9:30 in the morning. So I took the initiative and I said, okay, let me just reanalyze the trade going on here and see whether or not it plays out, right? So in theory, I'm missing one little drawing here. Okay, so this is not that. Okay, my bad, wrong thing here. So we draw this out like this, just like that, and as you can see here, the goal, not the goal, but you can see that the pattern is starting to form, right? Again, the pattern is called rising wedge pattern or rising wedge pattern. You guys can look it up. And all I'm doing is making an assumption that, okay, this pattern is forming, and because it formed, when you guys look it up, when this pattern forms, that means that the market, Apple, or the market in general, right? Because Apple goes along with SPY and the QQQ, so on and so forth. But since I was trading Apple, I knew that if this pattern played out, we were waiting for this to touch the third point, because we had 1 point here, 2, 3, right? Let me go ahead and draw it out for you guys. We have 1. Hang on. Right here, we have 1 touch here. Hang on. 1. We have 3. And then we have a fall over here all the way down here. And then, we had another pattern that I took another put play here, right? So let me go ahead and delete this. And the reason why I'm showing you guys my play for today is because so I can try to visually picture how the market works. And again, patterns play out on their own. This took time for although this was like Monday when this played out, these patterns form, and I make trades based off patterns and trends that I see throughout the day. So I took a put play here right around, I believe it was 162.53. It was like a 85-90% what was it called, 90% return or something like that. So I bought a put betting that the stock's gonna go down. I made money all the way down here. I cashed out right around 150. I think it was like 159.18, and then I took another put position here, right? So I bought another contract of put, which was another 15% gain. So if we go to the 5-minute time frame, this is another pattern, another falling or rising wedge pattern, right? Right here, we bought another one. It's another one right here. Boom. And then the market, whoops, let me go ahead and exit that out here. Hang on. It's like something wrong with this. Let me get rid of this thing. Let me delete that. Okay. Another rising wedge pattern here. I wouldn't say rising wedge. It's more or less like a bear flag, but some people call it a rising wedge. I guess here, but this looks more or less like a bear flag. You have like this little sideways here, fell a little bit more. I cashed out right around here. I got a little greedy, not gonna lie, but I still made it out with 25%, 15, 20% profit right around here. And then the market, came back up and so on and so forth. But, as my trade consisted of looking at the bigger time frame, right? So I went to the 30-minute. I said, okay, well, we've already formed that head and shoulders pattern that I talked about last Wednesday. Now, is there a way for me to play catch up, or is there a way for me to, make money off of this even more? And that's what I did for today's trade, which was Apple. And again, that's all I do on, that's all technical analysis is about, is if, again, it's called rising wedge pattern, right? You have, right here, oh, wrong one. I'm drawing the trend line from here to here, right? And then again, I woke up this morning, market doesn't open till 9:30 in the morning, right? I said, okay, it's a rising wedge pattern. I'm going to enter a trade here, put position right here, which was right around 162.35. It touched this bottom trend here and it continued to fall over. I sold, bought another put position here. If we go to the 5-minute time frame, and then the market again following the pattern here, I bought right around here, which was, I believe, 159.25. Sold here. I got greedy here, and then, I didn't sell here. I could have, but I knew the market was going to come back up, so I sold right around here, which was a 15-20% gain on puts, which means that I bet the stock was going to go down, and then, done for the day, so on and so forth. So today is just, a little bit of a in-depth technical analysis of exactly how these how I make these predictions. You know what I'm saying? And that's all today's market consisted of. Of course, I'm going to talk about just very briefly about, the SPY and where we're heading, but whoops, wrong thing here. But yeah, that's just, one example of millions that I've, trades that I've done. And not millions literally, but, different trades that I've done throughout my time, where again, you just look at a pattern. I don't know why I can't pull this up. Okay. Different patterns that come around and come about. But you remember, again, like the main thing I wanted to highlight in this video in particular is that, the market may seem manipulated to most people. Not a lot of people may understand the logistics or the meaning of the market, but there is many factors that influence the market to go from one way to another, to head from a bullish move, which I said in my earlier videos, to a bearish stance, which is what I changed in my mindset throughout time, through news, and all that is important for me to make an assumption of where I believe throughout history, right? Like here, history, time, because of course the market has been around for, many years, and it takes time for all this to form out to help me come up with an analysis, an idea, an assumption of where I think the market is going to go from time to time. It may not be, exactly at that moment, but we can assume that it's going to end up in this direction, and therefore we take a position like I showed you guys with Apple, and then we see this pattern, we recognize it, we think about it, we say, okay, well, if this is the pattern we play out, this is where it's gonna bounce off of, your support here. This is where I should stop, sell, so on and so forth. But again, it's all throughout time. It's history, And today's video was just, again, really just highlighting the basics of the market, because I feel like I don't explain it well enough, in the sense where you guys are really understanding how this all makes sense, or what each and every little thing means. So if you guys like today's video, please give it a thumbs up. If you guys want to see more patterns and trends, and really, maybe I can pull up Google Images and show you guys what I mean and talk about, and go more in depth with it. But today's video is just super lightweight, and I just wanted to highlight the basics of just the overall market. But tomorrow or later this week, I'm going to make another video of just the overall broad market and where we're going to be heading later, moving into September. And yeah, I'll make another video about that. But I hope you guys enjoyed today's video, and I'll see you guys later this week.